Good morning, this is the Phoenix Blue update brought to you by Tom Colley on Friday the 9th of June. Big news today, obviously, the results of the UK parliamentary election. The data appears to say, and it's pretty conclusive now, that we have a hung parliament. We have no political party with overall control. We'll have a look at that in the moment when we look at the news. Other things going on yesterday, we had James Comey, the former head of the FBI, giving testimony to Congress. He came across as a very composed and compelling witness, and clearly that will have done some harm to Donald Trump and Donald Trump's administration. However, there was no fatal blow. There was nothing that hadn't been brought to our attention before the testimony. So I don't think it's going to have a significant ongoing effect to the Trump administration that clearly has been struggling already. And I believe we've seen a slight relief rally on the dollar on the back of that, simply because the element of uncertainty has disappeared there. Okay, so over to the news events themselves yesterday, because apart from that UK election, we had a number of other things. We had some negative trade balance for the Aussie and a negative trade balance, or not negative, below forecast trade balance for China that came out very early Thursday morning. We then had the ECB minimum bid rate announcement, as expected. That was held at 0%. The statement alongside that was very much as anticipated, the only major change being that previously they'd said that they would not be raising rates until, or rates would remain at their current level or lower until the QE program had come to an end. The end date for that is currently December of this year. What they did was they removed the or lower rate. So they're now saying rates will remain at the current level until the end of the QE program in December. So nothing drastically surprising there, nothing additional or surprising came out of the press conference. We then had the weekly unemployment claims out of the US, which came in as anticipated. So we come to the UK parliamentary elections. This is where we stand at the moment. This morning we've had the results of 645 out of 650 seats. The biggest party is the previous government, the Conservative Party. However, when they went into this election, they had a working majority. They were, in their own right, above this key level of 326 seats, which meant that, in principle, they always had the numbers to get their programmes through Parliament. What we've seen is a big rise in the Labour vote, and now neither of those parties are at the key level, which is 326 seats. Actually, realistically, that figure should probably be 323, because Sinn Féin, who hold some Northern Ireland seats and retained those seats, they don't take their seats in Parliament, never have done. So unless that was to change, that figure would become 323. But what's really interesting is how any coalition may or may not stack up. As far as the Conservatives are concerned, their natural partners would be what's listed as the DUP here. This is the Ulster Unionist Party from Northern Ireland. They are very much Brexit orientated, and their natural home is with the Conservatives, whose actual full title is actually the Conservatives and Unionist Party. So they're natural bedfellows and have often had a relationship. However, that wouldn't take them above the crucial 326 seats. It would get them to 324, but that would mean a lot of power or a lot of influence in the hands of the Unionist Party there. Labour's possibilities are probably even more limited. Their potential progressive alliance would potentially consist of Labour and the Scottish Nationals, who lost 22 seats last night. They saw a big move in Scotland from the Scottish Nationals back to the Conservatives, which potentially puts to bed any immediate or forthcoming independence referendum again. If they were to join with Labour, they still wouldn't have that. The Liberal Democrats, their ticket, their election ticket was giving the people a chance to see the results of the Brexit negotiations, and then giving them a second vote on the actual conditions of that. On that basis, and the fact that their previous terrible experience of being in coalition with the Conservatives from 2010 to 2015, they have a very small likelihood of them joining any other party. So what we seem to have is a genuinely hung parliament. In principle, within 10 days, the Brexit negotiations are due to start. That clearly is in jeopardy, that timescale at this moment in time. The leader of the Conservative Party and previous Prime Minister Theresa May there's potential for her to resign today. She took the party took the snap election with the aim of increasing the Conservative majority. She failed even to match the majority they already had and has been left with a hung parliament. From what I've read, the chances of her going into the next election as Tory leader are about zero. The only argument for her retaining, I'm sure, is some sort of continuity. So where we're sat there at the moment, we have a huge amount of uncertainty. You could not have probably made that up as uncertain as it has become. So we really will be looking almost on a minute-by-minute basis for the news to see what's happening in there. However, we've no intention of trading any pound-related markets today. Here is the pound, and as you can see, we've clearly had a big sell-off. That sell-off really commenced as soon as we saw the exit poll, which quite accurately predicted the end result. Almost all parties were quite surprised by that, be it to the negative side for the Conservatives or to the positive side for Labour, and they were very, very cautious before commenting on that because the exit poll was very different from what their own polls and expectations were. Clearly that was subsequently quite accurate, and now we have the aftermath. So we've clearly tested this level through here at 1.27. Another level down here, but as I said, in all honesty, it's a market that I'm still well aware of way from certainly today and even going into next week, because an announcement could come through at any time in respect of, should we say, a resignation from Theresa May, or some potential coalition, or that there will always be rumours that that there will be another election in the not too distant future, because whatever can be cobbled together would only be temporary. Okay, over on the US dollar index, well, I mentioned we seem to have had a relief rally on the dollar following the highly anticipated testimony from James Comey, the former FBI head. That didn't seem to deal the Trump administration a killer blow, and I think we're seeing a bit of relief from that. We're seeing a sell-off on the euro, probably a combined factor of a little bit of dollar strength, but the uncertainty in the UK election would undoubtedly have had some play on that. Although, in all honesty, it does leave the EU in a stronger position, a stronger negotiator, or should I say the UK in a very much weaker negotiating position with the EU, so could be perceived as being positive as well. Over on the yen, we're seeing a little bit of dollar strength again, as I've been saying. We've been seeing it now. We're on the third day of a bullish bars there. Again, there's a clear trend line and level here we're looking to retest. We'll be looking for a break above that in order to have a bias to the long side in this market. based on recent events. Two markets that are potentially of interest today. We've seen a big bullish week on, or certainly the early parts of the week, the end of last week, on the Aussie dollar. We've seen the same, even more so, on the Kiwi. Kiwi particularly potentially overextended here, so we will be looking for opportunities for pullbacks in this market and looking for intraday trades in this market today. But those two are probably the only markets we will be watching today. Okay, guys, so it's clearly a day for reflection, to protect your capital. Don't take any risks in markets that are related to the UK. We could see some shocks through the day and some significant price moves, etc. Okay, so that's it for the week. Have a great weekend. Reminder that next Wednesday's the next free trading event. Just get in contact with us if you're interested in that event in London on Wednesday the 14th of June in the afternoon. Okay, thanks for listening, and we'll be with you again on Monday. Take care, bye-bye.